Ladies and gentlemen, this is Alvin from Dr. Wealth, and today I want to talk about none other than SPH, Singapore Press Holdings. If you're a Singaporean, you should have known by now that the press is going to be transferred to a non-profitable organization, and that's a watershed moment for Singapore. So I want to give a quick share of my thoughts from an investor perspective, right? Not so much about the political side of the things, all right? So we leave politics to somebody else, and let's talk about from an investor perspective, and is this good for the shareholders, all right? Or if this can be an opportunity for those who have not invested in SPH to look at it now, all right? Usual disclaimer, pause and read it if you need to. Okay, so this is the announcement, all right? SPH generally have two big kind of business segment. One is, of course, the media. That's where the bread and butter was since, especially after the independence. It really provides Singaporeans the daily news and updates about Singapore as well as around the world, right? It plays a crucial role in Singapore, I would say. And then it also known to have very strong property portfolio. Okay, so what they're trying to do now is that because the media has not been making money or have seen the business decline over many years, they have decided that it is best to transfer the ownership of this SPH media into a company, public company with limited guarantees. Okay, so we are not familiar with what this structure is going to be, right? But it is non-profit in nature. And they hope that with this structure that shareholders do not need to keep sponsoring this media losing business, right? Such that once after this structuring has been done, shareholders of SPH should see better profitability and even enjoy higher dividends, right? So it is good news for the shareholders, in my opinion, all right? The question is, media will still play a very important part. The press will still play a very important role in society. How are we going to fund this? Okay, so while on one hand it's good for shareholders, on the other hand, I think there's a bigger problem to be addressed. Okay, but this is not without pain for the shareholders, right? There's a one-time investment into this SPH media before the restructuring is done. There'll be $80 million cash injected into this entity, and there will be also issuance of SPH REIT units as well as 10 million worth of SPH shares into this SPH media. Okay, to keep it going, the details about who this CLG is going to be, how it's going to manage, the details will come later, right, as promised by the management of SPH. But that's what we know at this point in time. And the amount of investment that's going to be borne by the shareholders of SPH are also stipulated. That's $110 million in totality. Okay, may not be a bad thing because it's just a one-time thing, and once this is done, you can stop the bleed in the media business that's part of SPH. Right, so I see this more positive than negative for shareholders, of course. And on the bigger picture is like we have seen over the years that the new media or the digital media has really taken the lunch of newspaper around the world, not just SPH, right? To be fair, but of course, let's just look at the local context. And I'm just bringing out a typical Straits Times kind of publication where it used to be a main source for advertiser to reach out to an audience. But we know that as time goes by with the internet, more and more people are going online instead of going to the newspaper. Even Straits Times posts a lot of stuff online, and people just share the link around, right? And that's where SPH can still sell advertisement on their Straits Times website. But it is not as effective as the past because now advertisers have a lot more avenues, and some of these avenues are a lot more effective and cost efficient to advertise outside of what Straits Times has got to offer. And we all know that the internet media started to really generate serious revenue from advertising, and that started with Google in 2000. Okay, and then Facebook with their social media, they became the most popular place online, right? With like 3.8 billion kind of users, and that's more than any other news publication out there, right? You can't find that kind of eyeballs that's on all these social media sites. So these are the two big giants that really took away a lot of the general advertisements from newspaper, right? Just even take it from Dr. Wealth, a small company like us, we don't advertise on SPH media, right? But we do advertisement. We pay Facebook to broadcast our bring our articles to a bigger reach, as well as run some Facebook ads from there. Okay, so that is a trend, all right. And not only that, we also started to see other things like blogs, forums, or other website, and like even Mothership, which covers a lot of local news. Okay, that will draw some eyeballs away naturally. And when you draw eyeballs away, you also draw the advertising dollars, right? And not only Mothership, you started to see interest sites that come out, whether it's motoring, whether it's even luxury watches, trendy fashion, or even food, right? So you have separate sites dedicated for such things, and advertisers suddenly found that, hey, if I wanted this target audience only, I do not need to pay for other eyeballs that are not interested. I can just go straight to all these websites to reach the very targeted audience that I'm looking for. Right, so a lot of all these general ads started to move away from news publication. And in terms of classified ads, okay, last time, Straits Times used to have very, very thick classified ads on the Saturday edition. I remember those days where the classified ads thickness of that section can be much thicker than the main news that they're trying to deliver, right? So that means that's a lot of revenue for SPH or Straits Times specifically, right? But we also have seen that websites have came in and served a particular need better than a newspaper in the online digital world, right? We have like SG Kamat, who came out and take away the car section in the classified ads. Okay, there was a long time ago where especially my parents' generation, they buy cars, they look for properties, they look for jobs from the classified ads. Okay, no longer that case anymore because of all these websites that came about. So SG Kamat replaces that car section in the classified ads, such that eventually eventually SPH have to offer to acquire SG Kamat and put it under its wing and its group. Okay, you acquire a competitor, right? And Property Guru, okay, a well-known website that publishes listings of properties, have also replaced what the classified ads were trying to do. Okay, and then we also have job sites like Job Central, JobsDB, a lot more others that come in and offer job listing, right? And targeting that's better for the advertisers is also cheaper in that aspect. Okay, so that really was an unbundling of the newspaper business, the advertising model that for the past 20 years, right? So it's not just the last 2-3 years kind of issue. I think everyone is aware of that. And I also believe the management of SPH understand what's going on. But somehow the response or the degree of the response wasn't enough, right? That we have to be ending up in this kind of situation where the whole media business is no longer a viable and a profitable one. And they need to do something about it. Otherwise, shareholders will be very unhappy, right? Why am I paying for this for public good, right? And the shareholders are footing the bill. Okay, so it's unfair, and that's why they are trying to change the situation. And if you take a longer picture, I plotted it out over the last 16 years, 17 years of the media revenue of SPH. Okay, just the media revenue are excluded. All the rest, including the property, is excluded from this chart. Okay, so we can see that the decline of the media revenue actually started from 2012. Right, and then it's just gone downhill year after year, and the profits also dwindled. If you can see, the orange bar are the profits before tax, and then the blue bars are the revenue. All right, so it's not the 2-3 year thing as I mentioned. Okay, not what the press release was trying to say. Okay, it is more than that. Right, it's essentially the past 8 years. Shareholders have seen that fall, that never recover back to even close to where it was earning prior to 2012. Okay, so that is that situation. All right, it has been there. The writing has been on the wall. Okay, for a long time, right? And of course, there have been a lot of fingerprinting in the social media space. Looking at the latest CEO mismanaging the company, right? And all this thing. But as I said, the problem started, probably if you can backdate it, is 2012. Even though Google started in 2020, Facebook started in 2017, all right? But we don't really see the impact to SPH. In fact, you can see that there were some years that the revenue actually gone up for SPH. And I think that probably that's why they see that there's no need to rock the boat in the earlier, or the first 10 years of the existence of digital media in the ad space. So I think that's fair, right? And then the problem is that, when you delay the action, you delay the change, once that domino start to fall, the first one, it is very hard to recover from that. And I think that was what happened, right? It's like the analogy of putting a frog in a slowly boiling pot of water, right? When you realize it's too late to get out of it. Okay, so I think that was that comfort level that SPH had, right? There is no need to panic. We're still earning good money. Why switch? All right, so that is probably the critical point that that led to what it was today. Okay, and I think the problem is not just for the current management, right? Specifically the CEO Ng Yak Chung. Okay, if you look at the problem earlier, it started from Alan Chan, right? And that was in 2012. There was probably some responses, but it just felt that it wasn't enough, right? And you can see the media revenue just keep dwindling from there. Okay, and the funny thing was that you can see that Alan Chan's pay actually gone up for between 2012 to 2017, right? While the media revenue went down for the same period. And to be fair, if you take a look at Ng Yak Chung, his pay is lower, and in fact his pay got cut as the media revenue goes down, right? Just that, because he's the current CEO, he gets a lot of the blame for this action of jettisoning the media business into a non-profit organization. Right, so to be fair, I think the problem started much earlier, okay, and definitely the previous CEO has a lot more responsibility to bear, in my opinion. All right, so it is not confirmed yet that the media business is going to spin off to the non-profitable organization, right? It is up for shareholders voting, and that's going to happen around July, August. If it is approved, then the transfer will happen 3 to 6 months later. Okay, so it's not immediate, and you will get more information. If you're a shareholder at SPH, you get more information, especially the circular that's going to come, who's going to be CLG, what you're going to do with all this transition stuff, all right? And you get a vote, okay, whether you like it or not. And I think this is a fair vote because SPH has no substantial shareholder. That means there are no shareholders with more than 5% shareholding. Okay, and that's because of the Newspaper and Printing Presses Act that Singapore uphold and enforce, right? If you want to buy 5% of SPH, for example, okay, you need actually minister's approval, right? Because before you can even have that kind of stake. Okay, all these are the nominees where you can see it's like more than 5%, but these are the broker that is holding the shares on behalf of all the customers, right, within the account. Okay, so there's no one person that owns more than 5%, right? When that happens, that means the process will be a lot more democratic. Okay, that means every single vote counts, right? So I would say that this is an important juncture, not just as a shareholder, but if you care about the journalism in Singapore at large, okay, the quality of it. Would it be better with SPH or would it be better under a non-profit organization, right? That's it. Actually, the entity is still belong to SPH. The only thing is that you no longer fund it via SPH pockets. Okay, so that is how the structure is going to be, right? So you have to decide, okay, and you have the power to decide through your votes, right? And whatever is remaining, let's say the media business is really transferred to the non-profitable organization, right? What is left is mainly its property business. It is still valuable, right? If you take a look, it has a SPH REIT, which have quality properties like Paragon in Orchard Road. You have the Clementi Mall, which is a Heartland Mall that's very busy, and a couple of other, handful of other properties in Singapore, right? And they also moved to the aged care, which I thought is a very good theme to have due to the aging population in Singapore. If they can really expand this and even create and eventually spin off a REIT aged care REIT in Singapore, I think that will be very popular. All right, and I even wrote an article about it, an unsolicited advice, okay, or strategy for SPH. Okay, but it seems like they are expanding their portfolio. Right, they also have other development projects, residential, some JVs here and there. They even have a data center investment with Keppel, right, converting one of their old property at Genting Lane into a data center, gearing for the future, right? So it looks promising. And they also have a purpose-built student accommodation in the UK mainly, okay? That of course during the COVID-19 didn't do that well, and we shall see from here, right? And what happened to the education space, overseas university education, how will it transform after this COVID-19, or would it remain the same? So there is a bit more risk on the purpose-built student accommodation, but in general, I think the property business is still pretty strong, okay? And they give some pro forma numbers after the proposed restructuring. All right, the key number to look at would be this net asset value per share. Okay, it should not be NTA, it should be NAV. All right, the net asset value per share is about $2.08. It's about $2.08. So that is the number that you want to remember. Why is this number important? Because once it becomes a property company, its book value is actually its property value, right? That's the way I see it, and it's easier to register that way. So what you do is you compare the share price to this book value of the company, or it's also called the NAV of the company, okay? And this is what the stock chart looks like for the last 18 years, okay? Since no, not 18 years, 9 years, right? Since 2012 to 2021. And SPH used to trade like $4, as you can see from this chart, and today is about 156, okay, at the time of recording, right? So it's a very big dive, and it's actually undervalued based on the NAV again, okay, per share of $2.08, which is a 25% discount, right? Trading at 25% discount from the NAV. If you ask me, I think it's not really a very compelling buy, even though there's a discount to the NAV, okay, because the gap isn't that big, right? I did write a post previously and say that, you know, if it hit about $1 is a very good price, because you can actually sell it and double your money from there, right? You have some more margin of safety, whereas at this point in time, it doesn't offer that much margin of safety as I would like. Okay, so I do think that it may not be the most compelling investment, right? But definitely it's undervalued by 25% from its valuable real estate properties. Okay, and I also wanted to like brainstorm who are the shareholders of SPH that could have benefited over the years, and who are actually the worst group of shareholders of SPH, right? So I give you some scenario. Those who have bought a long time ago and sold in 2012, just before, you know, the decline in the media business, they probably reap the most reward from it, right? So it's not like SPH has always been bad to shareholders, right? It has actually benefited a generation of shareholders, I would say, right? Especially my parents' era, okay? And those who have stayed long enough and collected the bulk of the dividends because the media was a cash cow, the dividends were generous, getting like 4-5% a year is very possible. And if you get in early, you might even see the dividend get raised, right? And you get more yields out of it. So I do think that even those who have bought like maybe 20-30 years ago and holding until today, despite the share price down, I think they more than recoup their capital they have invested in the SPH, right? So those are the beneficiaries. And also those who just bought last year, right, near the $1. Okay, I now even at 156, right, it's a good 56%, over 50% return, right, in just less than a year. Okay, so it has become a value stock, right? It used to be a kind of like a blue chip status, but because of the media business going down, the share price being beaten down, it has become a value stock at some point in time, especially in 2020. Okay, with sufficient margin of safety. All right. I'm not sure how many of you have caught that. Okay, I've written about it previously as well, and I also talk about the worst group of shareholders. Okay, I think the worst group are those who have bought at the heights or the peak in 2012 and hold until even today. Right, you will have more than 50% capital loss. Okay, if you have bought in 2012, right? And the dividends have been declining as well on the other hand. So you get a double whammy effect, right? You lost the yield, you also lost some capital that we have put in, right? So I do think that those who bought in 21.2 will be the worst lot, right? And of course, those who subsequently bought after 21.2 will also have rode the downtrend situation in SPH share price as well as a decline in dividends. Okay, so which means there are some unhappy shareholders, right? And I'm not sure how they will take it for this voting, right? Whether they will vote for or vote against the transferring of the assets, media assets, to the non-profitable organization. So from a shareholder perspective, right, or investor perspective, okay, I will say that there are definitely pros and cons. The pro is that higher profitability will be achieved going forward because the losses no longer need to be sustained by the profitable property business, right? And if the SPH become more profitable, more dividends can be given. Okay, so shareholders should be happy that it's a one-time pain, and then going forward, SPH would be more like a property company, and it should enjoy better profitability, right? The con is there's a one-time cost of injecting funds into the company with limited guarantee, right? So it is not free, okay, and they are not selling it. That means SPH is not getting any money out of it, right? Maybe there's a nominal fee, but it is negligible, and on top of that, they have to pay money to get rid of it. Right? That's the way to see it. So there is some cost to it. It's not free, and that means that SPH will still need to recover some of these costs over the next few years, right? So shareholders will have to bear that. Okay, we have to bear this cost. There's no substantial shareholders in SPH, which means votes can swing either way, right? So hearing what I say, you have to decide for yourself whether this is best for your case, best for your scenario, and you vote accordingly, right? I do think that this EGM or this voting is very important. Everybody who is a shareholder should vote because every vote will count. There's not like one big shareholder that can sway the entire decision, right? It's a lot more democratic, and exercise your power as much as you can. At this point in time, the share price is undervalued 25% to its NAV, okay, net asset value, right? As I shared with you, I would always prefer a much larger discount, and somewhere around $1 makes a lot more sense. At about 156, I think is neither here or there, right? It's not compelling enough. Okay, nonetheless, it is undervalued. It is not like super expensive, and depending on how this unfold, right, the share price may have more pressures going down. Who knows? Okay, and I just want to say the last part is that given the bigger scheme of things, if we consider beyond just the shareholders, I do think that the society now is in a situation that is not easy to solve, right? Because journalism plays a very critical role in society. You need credible news sources, right, to get informed about what's happening around the world, happening in Singapore, so that you really act on truth rather than act on some falsehoods, right? Especially important given internet now and social media. A lot more false news, false information can be spread easier compared to the past. So I do think that journalism is important, okay, and society at large will benefit from quality journalism. The issue is who is going to fund it and how is it going to be funded. All right. Shareholders, on the other hand, after it is being jettisoned from SPH Group and just go into the non-profitable organization, the problem is gone. Okay, so I would think that shareholders have a smaller problem to solve than the society at large, right? And of course, it's also unfair if the SPH Group continue to keep the media business and the shareholders have to bear it, right? Bear the cost for the entire society at large, right? That is not fair too. Okay, so I think that the bigger question is how can we resolve this and keep quality journalism going and share the cost a lot more fairly. All right, so that's all I have about this SPH. If you like what I've shared, if you think that you can benefit from more sharing from me in the future, remember to subscribe to the YouTube channel so that you get alerts and whenever we publish a video. All right, so thank you for watching, and I hope to see you soon. Cheers.